Welcome back, everyone. This is Chapter 3, Video 6, Preparing Financial Statements from an Adjusted Trial Balance. So let me go ahead and share my screen. Okay, before I begin with this topic, I wanted to let you know that this particular slide is very good. I would take it with you into the exam because I'll have some questions, theoretical questions, and this kind of tells you a little bit about how to approach the question, and we'll go over it again during the test review. Anyway, what would happen if you didn't record an adjusting entry for prepaid expenses, right? Well, the best way to do it is to put an adjustment down that you know for prepaid expenses. A classic is debit supplies expense and credit supplies. So if you didn't record this entry, what would be the effect on assets? Well, assets would be overstated. Why? You didn't credit supplies and you didn't recognize the fact that you use those supplies. So your assets would be overstated. What would be the effect of not doing this journal entry on expenses? You didn't do this, right? You didn't debit supplies expense. So your supplies would be understated, right? You didn't do that. And so notice that this gives you a little bit of understanding of why they say these things up here. For instance, if you don't do a prepaid expense AJE, your assets will be overstated and your expenses will be understated. So to correct that, make sure that we have the right amounts, we do the adjusting journal entry. Debit the expense, in this case, it's debit supplies expense, and credit the asset. In this case, it's supplies. Okay, so just remember that. And I'll try to remind you that when we come to test time, which will be a little bit down the road. Okay, here we go. Prepare financial statements from an adjusted trial balance. Well, what is an adjusted trial balance? Adjusted trial balance shows the balances of the accounts after adjusting entries have been posted. Just like any other trial balance, the purpose of the trial balance is to prove that debits equal credits. And the adjusted trial balance is the primary basis for the preparation of financial statements. In the old days, I would actually have my students prepare this schedule. We would take a regular trial balance before the adjustments and put it into a schedule here. And where do we get these numbers? Well, these are the ending balances from your general ledger account, right? But these are unadjusted. Well, then we have to make our adjustments, right? And so this schedule is kind of nice because we can put our adjustments in and see what our adjusted trial balance would be. For instance, in the unadjusted trial balance, we had 9,720, but we know that we used 1,050 of the supplies. So we credit the supplies. So our ending supplies balance is 8,670. The numbers in the adjusted trial balance are the ones that we are going to use for our financial statements. And how do we use the adjusted trial balance? Well, just like this. We start out with the income statement, and we have revenues, we have expenses, and net income. So what are our revenues? Well, we have one, service revenue, 10,600. You put it in. And now we have to list our expenses. And here are all the expenses in our adjusted trial balance. Here's all the expenses, and list them here. Add them up, total expenses. So revenues minus total expenses is going to give us net income of 2,860. Now that net income flows into our retained earnings statement, right? Net income here. Now we're assuming that in this example, we began our business on October 1. So we have no beginning retained earnings. So it's 0. We add the net income, and that's our intermediate figure. But we know that we need to include dividends, right? Net income increases retained earnings, dividends decreases retained earnings. Well, where do we get the dividends? Well, right here, dividends of 500. So we put it in. So our beginning retained earnings plus net income minus dividends is our ending retained earnings as of October 31. Now, this 2360 is going to follow us to the balance sheet, right? Remember that number. Here we go. And there it is, 2360. So we can put that in there. Okay, in the balance sheet, we know that we're going to put our assets, liabilities, and equity accounts in, right? Well, we know about, the assets, right? They're usually debits, right? And so we put them in here. But notice something new here. We've got this equipment and then the related accumulated depreciation. So accumulated depreciation equipment is what we call a contra asset account. It goes against that equipment. Accumulated depreciation, because it's contra, it's a credit. So if I ask you, hey, what kind of account is accumulated depreciation? And you'll think, well, man, it's a credit balance. It might be a liability. No, it's not. It's a contra asset account that is put on the balance sheet. So this is how you do it. Equipment less accumulated depreciation of 40. So we subtract the 40 from the 5,000 to get our book value of 4,960. We bring the equipment and less the accumulated depreciation in the inner column because we want to net them together, and the book value will bring over. And then from there, we can just go ahead and add up all of our assets. Now, liabilities, you guys know how to do that. They're all credits over here. Payables, all the payables, and of course the unearned service revenue. If you say unearned, that's a liability too. So we list all of our liabilities here. Now, we in the stockholders' equity section, we already have the retained earnings, right? We got that from the retained earnings statement. The only thing we have left to do is to pick out our common stock. And there it is. It's $10,000. So common stock, $10,000. So when we add our total liabilities plus our equity, we get 21,910, which agrees with our total assets. And we are done. That's how it works. Okay, that's it for this short video. We'll see you for the next one. Take care. Bye-bye.